The RBA cuts interest rates, yet that may be the least of our worries, and the All Ordinaries Index rises and is now set to make a new all-time high. So what is the outlook for the stock market for the rest of 2019? Hello and welcome to this week's Australian Stock Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within, and we're Australia's most trusted stock market educators. Just before I get into my thoughts on the Australian stock market, welcome to all of you who are new to our channel. I do hope you enjoy the videos, and if you have questions, please comment below as I'm happy to answer them for you. Now before we move on, hit that subscribe button and click that bell on the right of it so you keep up to date with my latest videos. Also remember to tune in to our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Standard Time. This is a show where you get to ask us, the experts, to look at your favourite stocks and answer all of your questions. Now, it was no surprise that the Reserve Bank of Australia cut interest rates to a record low of 1.25% with the intention of stimulating the Australian economy. But was this the right decision? Now, we all know that a lower cash rate means it's cheaper to borrow money. And whilst in theory this sounds great, it can also be very dangerous. In essence, lowering interest rates encourages people to borrow more so they spend more and hopefully stimulate the economy when they do. But is borrowing more really the answer? If we look at the debt levels for Australians, we know that as a society we borrow too much given that we are already heavily in debt. Now, the Australian household debt to GDP ratio is the second highest in the world, next to Switzerland. And like Switzerland, we are in the top 10 most expensive countries to live, especially when it comes to housing affordability. For years we've made borrowing too easy, which has resulted in an overpriced housing market that has subjected many to mortgage stress. Whilst a drop in interest rates may help those in mortgage stress to relieve at least some of their pain, it certainly won't stimulate them to spend. On the flip side, why would we want to encourage people to borrow more, especially when we know the stress and damage that high debt levels can have on families, and in particular when our housing market is still way overvalued? If you look at total debt levels, on average Australians owe over $430,000 per person, not including children, with over $10,000 of that attributable to personal or credit card debt, which is an alarmingly high number. Australia is experiencing flat wages growth and increasing costs of living, especially in areas related to non-discretionary spending such as electricity, insurance and healthcare. This means Australians are continuing to spend a higher percentage of their income just to survive. What's even more concerning is that the average overall household savings reduces the more we spend, which means we're experiencing even more financial stress. The question that has to be asked is, will lowering interest rates get the economy moving? I don't think so, because the issues are far more entrenched than that. We need to change the bad habits that the excesses of the 80s started, and we need to get back to basic, sound money management rules so Australians break this ever-increasing debt cycle. Unfortunately, with debt, there's always an inevitable end when countries, businesses and individuals borrow too much, and it's not pretty. So how can Australians make the most of this current rate reduction? The simple answer is to pay down debt with the excess funds. In addition, regardless of what's happening in the economy, there will always be opportunities in the stock market to increase your wealth. So using any excess cash to buy growth assets that pay income, like stocks, will support you to get out of debt faster, which is always a good idea. Turning to the markets this week, the top performing sectors in the All Ordinaries Index was the utility sector, up nearly 3%. Whilst financials, consumer discretionary and industrials were just in the green. Energy, information technology and healthcare were the worst performing sectors, all down around 1.5%. In the ASX 200, the best stocks were Eclipse Group, which was the top performer, up 20.54%, following the release of its half-yearly results. Whilst the results weren't anything to get excited about, they were above market expectations. Next on the list was WiseTech and Abacus, both up nearly 8% for the week. Following its stellar rise the previous week on news of a takeover from a Swedish private equity firm, Focus Group fell heavily, down by 17.86% after the takeover offer was withdrawn. Syrah continued its downward spiral, falling around 17%, and Bravura was down 13% on news that it may now cost the company more to take over financial industry tech company GBST. So what do we expect in the market? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also look at the stocks that you've chosen for me to look at.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services licence, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
In another exciting week for the Australian stock market, we actually ended up rising for the week, which was a little bit unexpected for a lot of people, thinking that our market would continue to fall away. So let's have a bit of a look at the chart right now. On your screen, you're seeing a monthly bar chart of the All Ordinaries Index, because what I like to do is go back to the bigger picture all the time. I find a lot of people look at these daily fluctuations, and as I say in my book, and I often talk about with traders that I'm teaching, if you're looking at daily movements all of the time, you're going to get it wrong. You're going to get it wrong most of the time, because daily movements are irrelevant. And even if you go and study back the US stock market or world stock markets, you'll know that there's been experts back 200 years ago say, those daily fluctuations are pretty useless to you. They actually make you more emotional and trade emotionally, and I find that's real common mistakes that beginners make. So when you're looking at the monthly chart, you're seeing that long history. So on your screen, you can see this little dashed line. Now, I've just used the trend line tool, but what you're seeing is that's from the low after the GFC, March 2009, and I've just connected a couple of lows down the bottom here, and you can see how our market keeps coming back and around along that line. So as soon as we go below it, we start to look at coming above it, and now we track along it. So now we're moving away, and eventually it'll come back to it. So you can see that journey that the market is taking, and it's like going anywhere from Melbourne to Sydney or Sydney to Brisbane. You have a roadmap, and this is sort of like a roadmap. You'll know how our market is going to travel. Now, whilst I say that, is you don't look at the market to buy stocks. The market gives you an indication of whether the psychology or the overall psychology is bullish or bearish. But right now it is looking good. But let's go down into a weekly chart and just have a bit of a look at our weekly chart. So we can see, if I expand that up, you can see here how last week we opened there at 6491, pushed right down, thinking the market would go further down, but then it came right back towards the end of the week to close a little higher. The previous week we did close lower, so I wasn't expecting too much of anything down. I thought our market would travel up last week, and I think right now it is moving up, and I think we will be moving up through to over the next few weeks. This week will be that pivot. If we get an up week this week, which I think is going to happen, then we will break that high that we made a couple of weeks ago at that 6598, and it'll travel on. And I think over the next 2 to 6 weeks, we'll probably even challenge and possibly even break the all-time high for our market. So everything's looking good. I still do like the energy sector. I still do like material sector, healthcare. That's not a bad sector as well. I do like that. Banks also not quite yet, but we will be looking at a bank in our question. So let's go to the stocks for our question. We've got the first one from, a question was from Billy Neely. He says, LTR, what are your thoughts? Wealth Within, I do own it, and I got in at around 4 cents, and it had a little run, but I'm relatively new to trading and would like your thoughts. They have good news on the horizon, hitting very good drilling results with more results to come soon. Was just wondering your thoughts on it. Now, I did have a little conversation back with this person saying, well, why did you buy it, etc., etc. So, and I said to him, what about solid information? And he said, Wealth Within, what would you call solid information then? Is releasing drilling results and cost not information? It is information, but the information is just what the market needs to know. And it's not super solid. I mean, against the end of the day is you can have all this drilling information saying, yeah, well, it's looking positive. We may be hitting gold. We may be hitting oil. We may get this resource, it's looking good. The soil samples are looking good. All sorts of things. And I've seen so many times over the last 20, 30 years of results coming out, and then, 3-6 months later, people have all bought into this stock hoping and buying it on hope that they do strike it rich. Hey, there's gold in them here, there are hills, and only for the next results to come out and they're terrible. So it is all just speculation to me. Unless you're selling something and making money from it, then everything is speculation from that point in time. And again, if you're new to the market, this is not even close to being a stock that you should be looking at. And I'm not sure where people get their stocks. And I know a lot of people, a lot of the questions that I get are always really low cap stocks. And you've fallen into the real classic mistake of buying a low price stock thinking it's cheap, when you should be buying a thing like a bank or a Cochlear or a CSL or a Wesfarmers or all sorts of stocks, a Fortescue or BHP or Rio, those sorts of stocks, because you get hold of my book, Accelerate Your Wealth. It'll teach you how to pick the stocks, how to find the right stocks for you. But if you're new to the market, you're going to make all these common mistakes. Looking at the chart, you can see this massive, massive, massive move that it's made. And I'll bring up on the weekly chart. And he bought it at 4 cents, as you can see, somewhere around there. So it had already moved quite a bit before you bought into it. But now you're probably worrying when to get out. And it's sitting there currently. It's sitting at a close last week at 10 cents. So you've done exceptionally well on this stock. But again, you were guessing to get into this stock, and now you're worried about where you're going to get out, because there's no reason why it won't do exactly the opposite and fall quite heavily. But if you don't have an exit strategy, you do need one. This isn't a liquid stock. It's not. It's one of the stocks that I would never ever look at. And you can see here at the moment, it's still looking all right. It may go a little bit higher, but again, I'd just be happy with your profit. So whatever you do is up to you. But right now, if you don't know what you're doing, you are likely to hang on to this stock for years. If it does have any sort of bad news, it will fall right back down to that 2 cents level, and then it might go sideways for years, which quite often happens. I see a lot of people, they buy in on the stock as it's moving up, a low price stock, then it falls the other way, and then it sits going sideways for 2-3 years because some government didn't approve something, or something happened, or the mine flooded, or all sorts of manner of things can actually happen. Right now, as I said, I wouldn't be in this stock. So let's move on to the next one. This one's from Matthew. He said, "Hi Dale, I'm new to this channel and really like the content." Thanks, Matthew. That's really nice of you to say that. I was just wondering what your thoughts on NAN are. So let's have a quick look at NAN. Looking at this monthly chart on the left, weekly chart on the right. As always, guys, always look at the monthly and weekly chart. Nanosonics. Now look at this. It's been very, very bullish since 2013. Beautiful there. And looking at that monthly chart, you can see there it just trends really, really nicely through there. And just using what I was talking about before on the All Ords, if I just grab my little dashed line here, you can see here how it's pulling this sort of angle through here. But then if we move it up, let me grab my little line again, and we grab it. There we go, just grabbing it through here. You can see here, if I grab this peak through here, it didn't close above the line here, and it's just really come back to it. And it's now, if I just do this, it's open here, gap down a little bit this month, tried to push down, it's come right back. So that's a really nice sign at this point in time. So I do like this sign. It does look nice. It's a nice looking stock. It's holding up around that 440, 430 area. So it'll be interesting to see if it does start to move up. If we get an up move this week, it's likely to move through that $5.02 high. So I think that's a really, really nice pick. Again, not a super liquid stock, but not too bad. 5 million shares at $4, so that's pretty good. It's quite a nice looking stock, but as I said, it does look more bullish to me. So well done there from yourself, Matthew. So that's really, really good from there. Then we got one from Wealth Tree. He says, "Thanks for your thoughts, Dale. I admit my position in PLS is quite speculative, and I'm learning from your teaching the value of confirmation." So thanks very much. So love the work you were doing on here, and it will be good. We'll be looking to get my hands on your book. So that's hopefully do. This is PLS, just briefly just showing him PLS, and I was talking about how bearish it was last week. So again, it still looks bearish. Last week it did travel down even further again, and I think it's going to go further again. But do get my book, and you'll really know why what you're doing here is not necessarily following great money management. It's not following good trading or investing in this stock. And a lot of the beginners, they go out there and, as I said, they speculate on what they're doing. And I really don't know how people get their stocks, because some of these stocks that I get brought up week after week after week, I've never even seen. So you must be trolling forums or trolling different chat groups, that sort of stuff, trying to pick up hints and tips. And that's the worst place, by the way, to get all your hints and tips and recommendations from. The next question we've got from Daniel K. He said, "Hi Dale, I'm considering buying into Westpac Bank for a long-term investment." That's great. Do you reckon if the market will come into a small recession? Small recession, I'm not sure how you get a small recession. If you're buying something for the long term, you're buying it for the long term. So a lot of that sort of stuff, any short-term moves are completely irrelevant on that. So if you want to buy a Westpac because you think it's going to be good over 5 to 10 years, then just buy it. It's almost like swings and roundabouts, penny pinching, that sort of stuff. If your research says Westpac Bank is looking really, really great, it's going to be doing this, I think it's going to be $40, $50 a share in 10 years' time, just buy it. Doesn't matter which day you buy it, just buy it, if that's your research. So, but he does go on, do you reckon the market will come into small recession? I think our market's bullish, and I think a lot of people, they try and eke better pricing out. They try and buy something cheaper, or they try and get more if they're going to sell something. And this little, as I said, I can only call it penny pinching, and it's also trading to not lose. It's if your rules say buy, you buy. If your rule says sell, you sell. Don't worry about too much of everything else, and fine-tuning those little entries and exits, because you'll get it wrong a lot. He goes on to say, because if so, and if Westpac comes down in price to $24 to $25 a share, would it be a good buy or good price to buy into? The answer is I have absolutely, positively no idea whether it'd be a good share to buy at $24, $25 a share, because if it's coming down, I'm staying out of it until it starts to tell me it's strong. So whether that's $24, $25, whether it's $18, whether it's $15, whether it's $10, I don't know. It's basically, we wait for stocks that are going down to find support, tell us that they've found support, tell us that they're now starting to go up. Just because they fall to a price level does not ever mean I'm ever going to buy a stock thinking that's a good place to buy it. It's about having rules around that. So looking at Westpac, let's just bring that up and see it here. Right now, we're seeing on the monthly chart, let's bring it up. It's found down to that low at 23.42 back in December, and it's trading up. Right now it's bullish. So basically you're hoping this is going to come down to around about where my pointer is, and hopefully then buy it there. And if it's down at that point, I am staying away from that stock if it starts to fall away there. If it keeps moving up, then I think this is a really, really nice looking stock to buy. As I kept saying earlier, I think the bank stocks are really good for the second half of this year. And as you can see there, it's moving through this rough trend line that I'm drawing, which I can't get on. My mouse is not working fantastic. I think this is positive. I mean, if you wait for it to go to 24 and it goes to 30, 35, you probably missed the trade. So it's about looking at what's a good trade, looking at what rules you've got, and looking at where it's going to go. I never buy any stock for the long term. I would never buy Westpac for the long term. And I used to work for Westpac many years ago. So I'd be right now, I like the stock. Our preferred bank is CommBank, not Westpac, but it's looking much better. So let's move on to the next one. Is from M King. He said, "Howdy Dale, love your work on here and I've watched a few videos and hope to take your advice on a couple of shares after doing my own due diligence." That's perfectly perfect. That's not good English, is it? So that's fantastic to hear. Do your own due diligence. Always know why you're buying and why you're selling and how you're managing. And too many people just buy a stock and then buy and pray. That's what I call this buy and pray method. They buy something and pray it goes up. Was wondering what your thoughts on two shares are. EXL, I've been monitoring this one for a few months whilst it was trending upwards, and the last week or so it looks to have dropped, and I'm thinking it might be a good time to buy into. Why is that? Let's go and have a bit of a look at it. This has just dropped. I'd stay way out of this. That's seriously. Just because it's dropped over the last couple of weeks doesn't make it a good buy. This right now has a high probability of continuing to fall until it tells me that it's not falling anymore. So this could continue on down to $3 or $2. So right now, stay away from it. Keep your money in your bank and buy better stocks. I don't think this one's a fantastic stock at this point in time. Look how big and volatile it is there. So if you can get into it, doesn't mean you're going to be able to get out of it. And look at those gapping. Yeah, it's not highly liquid. What do we got there? 489,000 shares. This is not a stock you should even be touching, M King. It's very, very illiquid. Go for better stocks. That's what I'm looking at. The second stock he's got is SCP. This company tends to go up each year just before October. So I was looking at buying in at around mid-August sometime. Again, all stocks have 2 periods a year where they rise and fall. They go into lows twice a year. They go into peaks twice a year. So it's a really good that you're actually picking this sort of stuff up. But that doesn't necessarily mean that's where you're going to buy, because it swings and roundabouts sometimes, or it's not exactly going to be October every year that it's going into. Right now, this stock is looking a little bit more bullish around it. I'd be looking at it around August to see what it's doing, but right now this looks like it's going to keep going up. Shopping Centres Australia is a nice stock. It's a nice sort of mid-cappy stock. You're looking at, some really nice volumes going through there. Much, much better than the other one that you had there, EXL, which I think is a bit of a crap stock, but that's just my opinion. Looking really nice, beautiful looking stock, so I probably wouldn't worry about it. Again, I think it's penny pinching type stuff. If it's going up, you buy it. If it's going down, you keep out of it at this point in time. But this one's looking really, really good. If you do have some questions for me, always post down below in that chat form. Love to hear your thoughts. Love to hear your comments on the stocks. But remember, why are you buying a stock, or why do you want me to look at it? If you don't have a plan, and there's an old saying, if you fail to plan, you plan to fail. And most people that are sending me questions are guessing. So what is your plan to buy and sell? If you don't have a plan, buy my book. Make that your plan. Buy my book, Accelerate Your Wealth. You'll get a plan in there. You'll be able to understand what I'm talking about here and why you're taking risks. And what I find is most people, once they read my book, this light comes on. They go, wow, I didn't realize how risky I was with my money. So always trade with knowledge. Always trade on confirmation, not speculation. So that's it for me for this week. As a comment down below, hit the like button if you haven't done also. Also, catch me on tomorrow night's live show, 7 to 8 p.m, where I'm going to answer all your questions about things trading and investing. So good luck, good trading. Talk to you next week. Bye-bye.